Good morning, everyone. I'm Laureen DeBuono, Managing Partner at FLG Partners, which is the preeminent consulting CFO and board advisory firm in the United States. Today, we are happy to have Nancy Hargreaves join us for lessons learned by a healthcare and consumer CFO. So before we begin, let me tell you a little bit about Nancy and her background. So Nancy joined us in 2022 with over 20 years of experience working as a CFO in early stage commercialization life sciences companies and high growth CPG companies. Nancy has extensive leveraged and acquisition finance experience from her early days as an investment banker and as a hedge fund portfolio manager in London. Prior to joining FLG, Nancy was CFO at both Recros Medica, a clinical stage medical device company, and at Ionetics, a radiopharmaceutical provider. She was also VP of Business Intelligence at Invuity, a public medical technology company. Nancy has also been CFO at consumer companies, most recently at Trove Recommerce, earlier at Hint Inc., and then prior to that at Dove Spa, a UK venture-backed salon and spa company that was backed by Unilever. So welcome, Nancy. We are so delighted to have you here today and that you joined us in last year. So why don't we start and begin our conversation? So Nancy, first, give the audience a snapshot of a few of the key CFO roles you have had during your career and some of the milestones you achieved at those companies.
Sure, thanks, Lorraine. I'd be happy to. As a CFO, I consider myself fortunate to have worked with a relatively wide variety of companies across different sectors. The uniting theme throughout my career, however, is probably manufacturing. In my early days in investment banking, I conducted due diligence at manufacturing plants, where I was able to see the process and understand the challenges that go along with that. And in my finance roles at CPG, medtech, and biotech companies, they've typically manufactured products that you can touch and feel. Dove Spa was my first CFO role, and an interesting one. While there, I brought in a key strategic investor, Unilever Ventures, and with the capital raised from Unilever, we rebranded the bricks and mortar salons, developed our own third-party contract manufactured product line, and grew the business internationally. One of the early investors in Dove Spa, Verlinvest, was also a key shareholder in a beverage company called Hint Water. Hint manufactures a zero-calorie fruit-infused water, which was one of the first alternatives to sugary soda. When I joined the company, it was very early stage with no finance or accounting infrastructure. And during my 3 years there, I recruited the finance and accounting team, implemented structure around the month-end close, board reporting and financial planning process. In 2018, I joined Invuity, which was my first life science assignment. The company had just closed its Series C and was in its first revenue generating quarter. A really exciting time to be heading up the finance team. And during my 8 years at Invuity, we closed 70+ million of equity and a 24 million crossover round in preparation for the IPO in June of 2015. Later, post-IPO in 2018, I led the due diligence for the company through its acquisition by Stryker. After Invuity, I joined Ionetics, which was probably my most challenging role to date from a product standpoint. Their product N13 ammonia is a radioactive isotope used in cardiac PET diagnostic imaging and has a half-life of only 10 minutes. So the production of the isotope in a cyclotron therefore needs to occur really close to the hospital's imaging center. And one of the major projects I completed while there was optimizing manufacturing efficiency to increase cyclotron production threefold within the existing plant. My most recent CFO role prior to joining FLG was at Recros, a clinical trial stage medical device company. And as is true of many life science companies at this stage, the company actually failed to meet the FDA efficacy endpoint. We then had to plan and execute an assignment for the benefit of creditors, or ABC process, which is essentially a legal process in which the debtor assigns all of its assets to an independent third party called an assignee for the purpose of liquidating those assets and paying off creditors.
You know, ABC situations are so difficult. I've unfortunately had to deal with many of them in my own career. And not only are they not fun, but they're exceedingly challenging and you try for the best outcome, but it's tough. But I love the diversity of your experience, and it will be served well at FLG. So Nancy, I know that you are passionate about the importance of solid business planning and analytics to lay the foundation for profitable and sustainable growth at a company, be that in healthcare or consumer products. So tell me, what lessons in great business planning would you point out for other CFOs? I know that planning and analytics is one of your superpowers. So do tell us what your thoughts are there.
Yes, that's true. I would say the absolute best piece of advice I could give other CFOs is to level set your upsides for sales projections and revenue, and building contingencies in the case of operating expenses. It's the role of the CFO to provide a healthy dose of temperance to the financial and operating plan. In my experience, few companies exceed their revenue projections and come in under budget on spending. But the main driver of misses to operating plans is not often a lack of market demand, but incorrect assumptions around the timing of that demand. Mm-hmm. Teams typically plan without any timing buffers, and then when operational issues arise, as they always do, this leads to a lag in revenue generation to plan. Mm-hmm. And in life science companies, this gets really risky, as management teams often hire in advance of the commercialization curve, a classic case of the cart before the horse, and then end up burning through cash prematurely. Tracking actuals to plan in a timely fashion is also key. As a CFO, you need to be able to make adjustments to plan quickly when required. For example, if revenue is delayed, make sure you have a sign-off process for all new hires. Never just follow the original hiring plan. And from a CFO's perspective, don't be afraid to say no. Really understanding the drivers of variance to plan and having that detail can lead to better business decisions.
I could not agree with you more. And again, I've had many similar experiences. My view is solid business planning skills such as scenario planning, which you have talked about, and being able to pull certain levers when a business goes south, to use a colloquial term, is really, really critical and essential tools of any CFO's toolkit. So completely agree with you there. As you know, Nancy, CFOs must always balance both the short-term and the long-term objectives for a company when making decisions about which strategic moves to make, when to make them, and how much investment to put behind them. So share with us a story that illustrates how you as a CFO made these actual trade-offs.
Sure. So let me use a recent example. One of my FLG clients needed to look at ways to extend their cash runway, and that's an issue that many companies are facing today in tight capital markets. Clearly, the long-term objective of scaling and growing revenues had to be balanced with their short-term objective of minimizing cash burn. The company had already completed one RIF, a reduction in force, but given that 80% of their operating expenses comprised payroll and people-related costs, without another RIF, there was just no option to reduce burn. The CEO had really deep concerns around the impact of a second RIF on employee morale. But ultimately, we were able to work closely together to implement the necessary maneuver quickly and efficiently. This really paid off when the board's confidence in management grew, and that encouraged them to commit additional funds to support the infrastructure scaling. So that was really a win-win for the client.
That's a great illustration of how you make these trade-offs and how you discuss them with your CEO and implement them. So let's shift gears a little bit and talk about when things don't go according to plan, which is oftentimes. So again, tell us one of your own personal stories about a situation in which you've had to give one of your CEOs bad news, or something he or she really did want to hear. Sure. So how do you present that news, and what was the CEO's reaction, and how did you respond to that reaction?
So I remember one situation at a healthcare company I worked for, where we had what is known as field inventory. Mm-hmm. So product that sales reps use for demonstration purposes. I discovered with my team that the tracking system for the field inventory needed updating. And while on paper the inventory was accounted for, in reality, our sales reps had no chance of ever retrieving that physical inventory, as the hospitals were often unable to locate those items. My client was looking at a substantial write-off of this field inventory as a result. I had to deliver this unfortunate news in as neutral a way as possible to the CEO after conducting thorough research and providing all the financial analysis and implications to back it up. Naturally, the CEO did not take it well and, rightly had a lot of questions as to how this had happened. Fortunately, having been so thoroughly prepared for the meeting and ensuring in advance that the customer service team was on board, this really paid off. I was able to diffuse a lot of the heat from the conversation by pointing to the proposed actions which would prevent this situation from happening again in the future. I think the key takeaway here is that as a CFO, to stay calm, leverage the facts, and reduce any emotional responses to problems as they come up. This is something, in my experience, that ultimately gains the respect of others.
I completely agree with you. Always do the analytics. And in my own experience, I've always said, analyze, advise calmly, and always bring to the CEO or the board your recommendations on solutions. Because again, in my own experience, never bring a problem to a board or CEO without bringing the possible solutions with it. And it's always based on the facts and analytics. So could not have said it better. Let's now switch gears and talk about a favorite company experience you've had as a CFO. So what, in your opinion, has been your best CFO job? And then tell us why.
I think for me, the most enjoyable companies to work with are those where you genuinely enjoy the company of and respect your fellow executive team and co-workers. I know it sounds trite, but when the team has tough decisions to make, being able to vocalize conflicting points of view, making compromises and aligning on outcomes is so much easier if the team works well together. Mm-hmm. One of my favorite companies was Imbuity, and while there, one of the most rewarding challenges was working with the CEO on an exercise to reshape the commercial strategy. The company originally had identified its beachhead markets and were quite successful in their early commercialization. However, these markets were limited, and to grow the business overall, we needed to expand the focus of the sales team and access additional specialties. This process took several months, but paid off by delivering increased year-over-year sales growth. I do have my favorites, and they generally know who they are.
Okay.
But seriously, my advice for CEOs is that if you are recruiting for a full-time CFO, or if you are a CFO considering whether or not to join a company, take your time. And if there are any red flags during the interview process on either side, don't make a rush hire, as this will rarely make for a good fit in the long term.
Good points for the audience to know. So I agree with you there. Again, shifting gears, we know that the healthcare and life science sectors have been through a financing boom from late 2020 through 2021, and then things really changed dramatically and negatively, right, in 2022. So how do you see this changing as we move into the rest of this year in 2024? And how will this impact financing strategies for life science companies looking to expand their horizons via commercialization?
Yeah, so I'd say that sea change is well underway in the capital markets, and I believe it will likely continue through the end of 2024. Early stage commercialization VC-backed private companies need to conserve cash to the greatest extent possible. It was Paul Graham of Y Combinator, I think, who first talked about the concept of default alive or default dead. And for life science companies burning cash, this concept is extremely relevant. Being default dead, but assuming that new money will come in to save the company is a dangerous assumption. The growth at all costs era is behind us, and today a more considered and conservative approach is required. Hiring new people too fast, for example, is a surefire way to burn through cash and also a disincentive to new investors. Using a highly targeted approach to find new investors, partnerships or strategics often proves to be very successful. And opening up the prior round to new investors can be a good approach for finding funding right now, assuming that your company's valuation can be defended with the appropriate milestone achievements since the last close.
You know, it's interesting that you're projecting the end of 2024, because I think many life science companies and med tech companies that were able to secure debt financing last year and even do rounds this year. One of my companies that I sit on the board has raised a very substantial round, and good for them, but they are in the commercialization phase right now. But it's interesting because most companies that I know are assuming that the market's going to take off in the second quarter of 2024. So what I'm kind of hearing from you is kind of preserve your cash as much as possible, because it could take us through the full cycle of next year before markets start to open. So I think that that's a very good comment to make, and for the audience to understand that this cycle of tough capital raising could continue through the full year of next year.
Yeah, I think the capital markets are not going to recover much this year, however much people hope they will.
Mhm.
And the impact from the fallout of the Silicon Valley Bank failure is yet to be fully digested by the VC community. What we're also seeing right now is that post-IPO stock prices for many recently listed life science companies are below their initial offerings. So I see M&A activity increasing as an exit strategy versus IPO going forward. I often counsel companies on an IPO path that they should always look at strategic alternatives, particularly since with investor lockup periods post-IPO, it may or may not end up being the exit that they anticipate.
Could not agree with you more. Could not agree with you more. So yes, this is a very tough era for financing that may extend, as you said, into the full year of 2024 and may prove problematic for many life science companies. Med tech seems to be faring a little bit better than what I would call life sciences or biopharma companies, but we'll see how that goes. So I have one last question for you. I know you've been working with both consumer and life sciences clients since joining FLG, but what would you like your future focus to be as you go forward as a partner here?
So I do prefer companies in both the life science and CPG sectors. I've always had an interest in the sciences, and unusually, I guess, for a CFO, have a chemistry degree. So typically, I enjoy working with private companies with a high growth commercialization path. I'd say my area of focus would be companies where there is a strategic financial planning decision required, or working with an executive team and CEO to refocus the strategy already in place. I'm more drawn to the FP&A side of the business in my CFO roles. I enjoy a challenge and love it when the teams I work with come to see their business in a slightly different way as a result of us working together.
And I think that you've already seen at FLG that you have lots of opportunities in both of those sectors.
Yeah.
So thank you to our audience for joining us today and listening to the perspectives that Nancy has shared with us today as an experienced healthcare, life science, and consumer company CFO. And I hope you've enjoyed our conversation today. And please don't miss our upcoming CFO Roundtable Boardroom Dynamics, Managing Bad Behavior, that we will be doing later this summer. I will be facilitating, and I hope you join us for that. So thank you, everyone. Bye now.